Good morning, traders. It is Tuesday, August 1st, the first trading day of the month. Man, was July a great trading month. Market really found its footing, continued to grind higher. We've got earnings coming out. We're going to get to that in just a second. Every one of these videos starts with a review of the previous pick. I want you to see how that trade fared, and then you can go back and see what the selection process was. You need to have an understanding for how effective this system is. The best way for me to do that is to show you actual trades and then to follow up and to show you what happened after that original video. Then I go in and do market analysis, get our market bearings, and then we find another pick. So that's what we're going to do. MMM, 3M. That was our last pick. You can see that the stock had a nice breakout here through a downward sloping trend line. Earnings before the open. Stock popped up and continued to push higher. This is a really nice breakout, but we are not long the stock yet. Why not? Because this stock is very herky-jerky. And I mentioned that in the video. And we're going to zoom out just a little bit to take a look at the longer term price action. And you can see how the stock has generally been in a downtrend. Yes, there's a little bit of a head and shoulders formation here. You've got a double bottom, higher, low. That's nice. Got this breakout here. Let's put on our trend line so we can see what's been breached. That's a nice trend line breach. This is a very significant trend line breach. So let's zoom out a little bit further and you can see that trend line coming right in here. Very, very nice breakout. We also have the stock above the major moving averages. So we'll take those trend lines off very quickly and we'll put up the major moving averages. I still like 3M. It's doing exactly what I want it to do. So you have this initial pop up on the earnings announcement, and that's going to attract some profit taking. So they're trying to sell it, sell it, sell it, but the bid remains strong. And you can see how it's holding the 200-day moving average. I believe that this stock is going to have another leg higher, and we're starting to see some rotation into the laggards. If the economy is strong, that's going to bode well for the industrials. So tech kind of led the charge, and now some of the other sectors are starting to catch a bid. But you can see how that 200-day moving average has been able to hold. That's good. We want that to continue. So let's zoom back in. And let's take a look at the price action even on a 5-minute or a 15-minute basis. And the 15 minutes is going to give us a little bit more clarity. You can see how the retracements, okay, this is fairly orderly, but the stock found support here, and now it's just moving sideways. So buyers are coming in to support it here. We're not seeing any stacked long red candles and major retracement. We're going to go into that 1-hour chart and take a look at that for one specific reason, and that is that our entry point was going to be triggered by an alert on LRSI, the Laguerre RSI. On a 1-hour basis, please go back and watch the previous video. It's very important for you to get the background on this trade and this indicator and the methodology that we're using, because the market is currently in a stair-step pattern where it takes 3 steps forward, 2 steps backwards. That tells us that we do not have to chase. We need to be patient. So we set these alerts, and here you can see that LRSI is not above 20. It needs to get above 20, but you can see that since that video, LRSI has dropped from above 80 down to below 20. So now we're just waiting for it to pop up. Why are we using this approach, and what exactly is it that we're looking for here? How do we know that there is a dip and not a drop? Very, very important concept. The way that we know that is from the price action. And so on the way down, if we're seeing very choppy price action with mixed green and red candles that are overlapping, that tells us that the bid is very stubborn. Buyers are in there supporting it. If they weren't, you would see stack red candle, stack red candle, stack red candle, stack red candle. This entire move would be all fluff. And profit takers would knock that thing senseless. And you would retrace this entire earnings gap. But we haven't done that. In fact, that was your initial move. That has still been preserved. Yes, the stock is leaking a little bit lower, but you can see tails under body here. That is a sign that they tried to knock it down, buyers came in. Tried to knock it down, buyers came in. So this stock is finding its footing. It has not retraced very much. It's still holding the 200-day moving average. I really like what I see in 3M. And by not going in and chasing this breakout right in here, we have our alerts set. We don't have to hawk it. We don't have to monitor it. There's no position on. We have no emotional attachment to the stock. We're simply evaluating. And if the stock does what we want during this LRSI move, when it finally does cross back above 20, we'll be able to see that, yeah, you know what? This stock held up really well. This is going to be a nice entry point for a herky jerky stock that's had time to digest gains, and now it's ready to make its move higher. So yes, still like 3M. So let's take a quick look at the market. Then I'm going to have a couple of other lessons for you, and we'll move on. You can see how yesterday, this is another classic example of the type of move that I'm talking about. How do you know that this is a dip and not a drop? Well, it's because the price action is not organized. So you get this little rally up yesterday and then whap, get this nice big drop in here. And then all of a sudden the market recovers. Buyers are back in there, back in there. Oh, not so fast. We got still some selling pressure. The entire move all the way down yesterday was mixed overlapping candles on very light volume. This was an inside day. It was a Monday. So you expect a very low probability trading environment. As a trader, when you come in and you see this type of price action, you're opening inside the prior day's range, the volume is light. As a day trader, red flags are up and you should trim your trade count and your trade size and expect very choppy price action. So this is the kind of retracement that does not bother me at all. And lo and behold, look what happened at the end of the day. Long green candle, long green candle. So they retraced this entire day's move in just two little 5-minute bars. That's because this move down was not that strong, and buyers were in there all day long trying to prop the market up, looking for an opportunity to buy on the cheap. And they were able to do that. So if we go to the D1 chart, we're going to see this gradual drift higher. Now, this long red candle, we call it a key bar, occurred on a gap higher last Thursday. That was after the FOMC statement. Gaps higher, this is where the market opened. Gaps up to a new relative high are often faded. Whap, 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 whap. That was a gap reversal. This could be very daunting and it could be a sign of longer term resistance. But when we look at this D1 chart, what we really should be taking away from this is that this is a beautiful, nice, tight, orderly grind higher. Hardly any retracements in here. You get some compressions, whoosh, next leg higher, take a couple of steps backwards, next leg higher, and these little dips in here are unorganized, mixed overlapping candles. Whoosh, there's your next leg higher. Again, very brief and very shallow, not retracing all the way to this point, higher, low. This is a very strong market pattern right now. It'd be nice if that heavy volume continued because that would give conviction to the move. We're going to be heading into a dead spot. So we've got a lot of news coming out this Thursday and Friday. So we've got actually a lot of economic news coming out throughout the course of the week. We have ISM manufacturing that's going to be posted today. We have ISM services coming out. We have ADP. We've got the JOLTS job report. Then we have the unemployment report on Friday. Really big dose of economic news. I'm expecting all of that economic news to be good. It's going to be market friendly. We also got some economic news last week. GDP came in better than expected, and perhaps the most important thing in that number was that the PCE deflator that measures inflation came in much lower than expected. Well, the Fed uses that as their primary indicator for inflation. That's going to give them some breathing room not to hike. So the market really liked that news. I believe that in time, these gains have to be digested. The market still has a few more weeks of decent bullish price action. So this Thursday night, Apple and Amazon are going to announce earnings. Those are the last of the mega cap tech stocks. So they're going to be reporting. Typically, shorts are very passive into mega cap tech earnings because those stocks have been leading the market higher. That's where the strength is coming from. So if you're a short seller, why would you want to short ahead of what could be very bullish numbers for the market? You're not going to. But once those mega cap tech companies announce, the air gets let out of the balloon. You see a little bit more profit taking. Shorts get a little bit more aggressive. Everybody gets uneasy because politicians leave DC for recess. I call them the rats. The rats leave DC for a month. Nothing gets done. The country's on autopilot. The Fed is in recess. The news dries up. You start to see a little bit of profit taking. But I am not expecting anything organized. I don't see that type of catalyst or that type of speed bump that's going to freak everybody out this year. So, 3 years ago, we were dealing with COVID. 2 years ago, we were dealing with COVID. Last year, we were dealing with a Fed that was increasing interest rates at a 75 basis point clip. Those are all threats to the market. I'm not seeing that right now. And the Fed is closer to the end of tightening than they are to the beginning. And all of this has not caused an economic collapse. That was the big threat. We had the bank failures in March. Okay, another red flag. We've gone another 4 months without any other warning signs. And if there were a lot of banks that were on the ropes, we would have seen some other warning signs right now. There would have been another bank or two or three that would have been in the crosshairs, and that would force us to keep our guard up. But we're not seeing it right now. And we're also seeing VIX decline. We had the bank stress tests come out. The bank stress tests showed that they can shoulder a pretty hefty recession. Well, we're not seeing a recession, so the credit risk is fairly low, and that's why the VIX has been plunging. And I could put up a chart of the VIX. What I want you to understand is that I am not seeing any great reason for the market to decline in here. And there's the VXX. You can see there's not a real threat. No one feels as though there's a big sell-off coming. So when we look at that SPY chart, your takeaway is that yes, prices have rallied up a little bit. We're likely to see a dip in here, maybe of this magnitude, but we should be able to find support right around that 444 level. And that also coincides with this upward sloping trend line. Until 444 is breached on heavy volume with a long red candle, I am going to stay on the long side of the market. Do I have to be aggressively long? No, I do not. So, what I'd like to do is I'd like to find some stocks right now that have been laggards. They've been unloved. There's going to be some rotation into those stocks because everyone is getting more confident that the market has established a low and that the economy is not going to fall apart. So the stocks that have already surged higher, many of them being tech companies, their upside might be relatively limited, And if we do get a dip like this, we're probably going to see that profit taking in those runners. But the laggards that are just starting to catch a bid, that have just started to get off the deck, those are going to be pretty stable because they have nearby support and money is just starting to flow into them right now. So that's what we're going to be looking for. I'm expecting this nice trend to continue. Any dip down to this 444 level between now and mid-September is going to be a buying opportunity in my opinion. So let's take just one very quick step backwards. How do I know that this is a dip and not a drop? If you see long red candles like that, 1, 2, 3 stacked, and you start breaking down below these upward sloping trend lines on heavy volume, warning sign, the selling pressure is super heavy. Do not stick your head in that noose. And if it were to happen, then I'd be a very willing short seller. But I'm not expecting that price action. Instead, when we get these moves lower, I'm expecting something like this. Just chunky, mixed overlapping candles. Shorts get a couple of decent days in there and then whoop, right back. Okay, now we're back at it. Right back at it. Little drift lower and then a bounce. Little drift lower and then a bounce. So nothing organized, like this. This is just, it pulls back for a couple of days and then instantly bounces. Well, this tells you that buyers are still in there. So that type of move in here for the next few weeks would tell me that yes, ultimately this is going to turn into a really good buying opportunity this fall because this is nice, tight, upward price movement for the most part on decent volume. Money is flowing back into the market. So right now, let's find a laggard or two. We'll take a look at these stocks and we'll see what we can do that would be relatively passive. We want to bide our time. Kids are getting ready to go back to school. That means that everybody's going to be taking some vacation time off. After Friday, the volume is going to dry up because there's not going to be a market catalyst for the next few weeks, and there aren't going to be a lot of market participants. This is a normal seasonal pattern. So if I go down my list here, I'm just going to look at green royal flush, for instance, and let's bring up that type of chart. And here you can see this is a choppy stock both on the way up and on the way down. You can see these are the types of mixed overlapping candles that are not very threatening because every time that the stock drops, it retraces. It drops, it retraces. And so this is actually a pretty nice breakout. We'll go into that D1 chart and you can see there's a nice breakout. I would day trade this stock. I have been day trading this stock. Good breakout, but it's not a laggard. And I'd really like to see something that's just starting to get off the deck. This is a retail company. Take a look at Roku. This is a nice breakout. We traded the heck out of this last Friday. That was a beautiful, beautiful move. And now you can see some follow through getting a little ahead of itself. This is one that you would definitely want to put a LRSI alert on, and you would want to see half of this long green candle preserved. So if it retraced down to this 8250 level, that would be okay, but I wouldn't want it to get any further than that. So you get a little retracement in here, but you preserve this gap, that would be okay too, even if it filled, and then you get your alert, no problem. Then the stock's probably going to be heading higher. But when you have a big move like this and a market that could be going into a little soft period, you have to be more cautious. So it would not be the type of stock that I'm going to be looking for. I'm going to go into a search because we're in earnings season. So I'm going to be looking at strong after earnings. These stocks gapped up and they've been able to preserve that gap higher. And oftentimes what you'll see is that the earnings announcement comes out and then the stock flattens out, it doesn't really do much of anything, and then all of a sudden it takes off. Well, you look at it 2 or 3 weeks later and you go, wow, that was a really nice move. I missed it because the stock didn't have any follow through instantly the day after or 2 days after, and it falls off your radar. This search keeps those stocks on our radar. So let's take a look at a couple of them. I've got a lot of candidates to knock through, and in general, what you'll be looking for is green dots across the board because that tells us that it's on a buy signal, and it would tell us that there's heavy volume. The blue dots are volume on a 5-minute, 15-minute, and daily basis. So blue dots and lots of green dots are what we're looking for. Let's go back into this green royal flush search, and let's just take a look at a few of them. Roku was one that looked good. Caterpillar's another one. We have to navigate earnings right now, and you can see Caterpillar had earnings before the open today. This is a nice breakout through this little bearish flag formation. There's your flagpole, there's your downward sloping trend line. So we'll be watching to see what Caterpillar did today, and the number is out, and it looks like there's a decent reaction because this is the pre-open price action. So Caterpillar could be a nice stock for us to watch today. We'll go down the list and see if there are any others in here. AFRM. Lots of blue dots, lots of green dots. Well, in this instance, you can see this is really choppy, herky, jerky price action, and we have to navigate earnings. So let's already find stocks so that we don't have to watch, oh, gee, this would be a great play, but it's going to announce earnings in 3 or 4 days, so we don't really have any holding period that we can lean on because we're going to have to get out of that stock before the number. We don't hold over earnings. That's a complete crapshoot. And we've got a lot of earnings coming out this week. That's why I'm opting for this strong after earnings search. But there are a lot of candidates for us to knock through. So I'm going to look at stocks that have good option liquidity. And now you can see how that list is much shorter. And again, we're going to be using the same concept of sending alerts and waiting for those pullbacks. And we can see that MS has a lot of red dots in here, but I'm going to take a look at it for a reason, and that is that if we had used LRSI, you can see, first of all, this stock is super choppy. I don't care if you get a long green bar like that and a breakout. This stock is choppy. Financials are choppy. Basic materials stocks are choppy. Look at the nature of their business. You know, if the stock runs up and it's a commodity stock, is this the last drop of oil on the planet? What could possibly justify having stacked green candle, stacked green candle, stacked green candle? Well, if they had the biggest oil find ever, okay, well then maybe, but that's not very likely. Those stocks are going to retrace because that's what they do. There's just nothing that exciting about the stock. So knowing a little bit about the company helps, but you can get that off of the charts. Just look at the chart and it tells you this thing is choppy. It does not have nice organized moves higher. Does that mean that you can't trade it? No, it means that when you get a dip and a double bottom and then you've got a little breakdown, a breakout here above moving averages, okay, yeah, you can trade that. This happened to coincide with earnings. But my point is that just look at the previous price action of the stock. And so if I had used the LRSI method, you can see how the stock runs up post earnings. Okay, this is all nice. It's above 80. Now it cracks down below. And now here you get your little poke above the 20 level on LRSI, which coincides right about here. Okay, this is it. Pete told me I'm supposed to buy when LRSI goes above 20 because I just got my alert. So bye bye bye, right? I'm in here. This is a good price to be in at. No, this is not a good entry point. How do I know? Well, there are a couple of clues. Same thing that I showed you on the way down applies on the way up. So you've got these rallies and they try and rally it up. Oh, here we go. There's a new relative high. Whap. Huh. Okay. Well, if there were buyers, really strong buyers, you'd never get that retracement. Stack green candle, stack green candle, stack green candle, just like a rocket ship going higher. Well, that's not what you got. Tiny little bodied candles. This is just a choppy move higher. And this price action tells me sellers are nearby keeping a lid on the stock. Okay. Starting to hit some resistance. Double top. All right, well, that's okay because LRSI is just now starting to roll over. So I know this rally is not that strong. It's starting to hit resistance. So now I get organized consecutive red candles in here. Well, I got my LRSI cross right in here, but you know what? This is fairly organized selling pressure. Why don't I wait and reset my alert? And now you can see how the stock has another leg lower. This is getting much more organized, and we're right back on this candle. No, I'm not very interested in this stock now because now this is the earnings candle right here, and we're going to start biting into this, and this stock is choppy as hell. Very important to be able to read price action because that is how we find the real McCoy. That's how we know a head fake from a legitimate move. So that's my intent right now, is to show you that price action. So I'm going to go through the list. I've taken a look at a number of these stocks previously, and I'm attracted to QS for a reason. And so, first of all, we can see that the stock on a daily chart is above the 20-day moving average. It's above all of the major moving averages, 50-day, 100-day, 200-day moving average, well above all of them. There is your earnings announcement, and you can see how the stock did surge higher and then it retraced, but it's been able to recover this bearish hammer, and it's continuing to push higher. So this breakout here held very, very nicely, and now buyers are starting to come in, and you can see these tails under body. So this long green candle has been largely preserved. That midpoint comes in right around the $12 level, and around that $11 level, this also is decent support right here, the open of this long red or long green candle, which I'm not expecting the stock to get back there. I'm actually expecting this breakout to hold. So let's do some other analysis. So we know it's above all the major moving averages. Let's see if any trend lines come into play. So I'm going to clear off the major moving averages, and now let's see. These are our automated trend lines, and you can see there are a lot of trend lines coming into play. So let's zoom out and let's determine exactly where they come into play, and let's get that longer term perspective. So we can see this is a nice trend line, and the stock is right on that trend line, and it's starting to poke through it. This is a significant trend line right here that was breached. We have a higher low, double bottom, got a high plus that we've been able to break through as well. This looks pretty dang good. Nice horizontal breakout. Everything looks good in here, and this is the type of stock that I'm looking for. It is an unloved stock that is starting to catch a bid. We're starting to see some rotation into it, and that long green candle that we had after earnings has been well preserved along with this breakout. And if I'm looking at this and I'm a longer term investor, would I want to buy this stock right here where it broke out? Yes, I would like to, but I'm probably not going to get a chance to do that just because of the price action. And the price action tells me that this thing is ready to go. There's a nice horizontal breakout there. Look at that volume. That volume was coming in before the earnings announcement, blue line above zero. You might not be able to see it real well with these other indicators up. And let me take off the relative strength indicator, which you can see it's got relative strength. So I'm going to take that off so that we can see the volume a little bit better in here. There you can see on this move right here, volume is coming in. Buyers are interested in this stock. Big volume, continued nice volume, even after the number. So, okay, checkbox, 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 checkbox. Market, checkbox. I'm expecting that the market's going to start hitting a little bit of resistance. As we head toward the middle of August, the news is going to dry up. I'm not looking for any monster pullback in the market, but I wouldn't be surprised to see a drift lower, perhaps down to that 445 level, but very choppy. So I want to be in a position where I am buying strong stocks because I don't see a fantastic market threat. Am I going to be chasing a stock like this higher, given that market opinion? No, I'm going to be looking to take advantage of some time premium decay, distance myself from the action. I don't want to worry about my trading very much. I plan on taking some time off myself. The intraday price ranges are going to be collapsed, so my day trading is going to be fairly minimal because I can't expect big ranges during the course of the day. All of this plays into my strategy, my market opinion, my opinion of the underlying stock, all matter. So I'm going to bring up an options chart and I'm going to devise a game plan. And so if I'm able to buy this stock around that $11 price level, which is just about at that breakout, you look at a chart like this, it's currently at $13.20. Would I be a willing buyer of this stock all the way back down here? The answer for me is yes, I would have no problem buying this stock given that recent strength, given the breakouts, given the big volume that I'm seeing in here. So if I take a look at the options that are available to me, August 18th, so that gets me to the middle of August. This is only a 2-week play. If I sell that $11 put, I'm going to be able to bring in about 24 cents in premium. So I've got to put up 20% of the underlying stock price to sell this put naked. And I am a willing buyer at $11. So push comes to shove, stock is at $10. I'm buying it at $11. I've already made that decision. And it has to happen in 2 weeks for me to have any assignment risk. So I would sell that for 24 cents. I've got to put up $2.20. This is going to generate a 10% return. 24 cents divided by $2.20, this is going to generate a 10% return in 2 weeks. That's a great return. I'll take that all day long, especially as the market starts heading in to a dead spot. I like the stock. I like the price action of the stock. I know it's an EV manufacturer. I don't care what the fundamentals look like. Don't have to know what the company is. I'm looking at the technicals. The technicals are telling me that institutions are in there buying this stock. That's all I need to know because they have the research teams to tell them that this stock is a good value at this time. So you sell that put, take a little time off. If you come back, if you're not assigned, cool. I just made a 10% return on that trade. If I'm assigned, okay, I'm long the stock, not at $11, but at $10.80, which puts me right at that breakout, which I believe is going to hold. And I don't have to think twice about the trade. And then if some day trading opportunities present themselves over the course of the next month, fine. I'm going to take advantage of those, but I'm going to know that there might only be a couple of decent trading days out of the entire week, and that most of the time I'm kind of sitting on my hands and I'm relatively passive, but I have these swing trades and time decay working in my favor to generate income. Very important that you have that because if you don't have those swing trades. You're going to get very, very frustrated that you're not making any money, and you're going to force day trades in a low probability trading environment. Thanks so much for watching, everyone. I'm going to do another video on Thursday, and then it'll probably be a week before I do another one. Good luck with your trading. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.